Right, welcome to MacroTrader, MacroTraders. A lot of stuff I want to get to in this video. One, hit that subscribe button because I'm going to be putting out a ton of content, and you don't want to miss it. Also, stay to the end of the video and you'll get a trade recommendation for this week. One of my positions. Now, this is not investment advice. Do your diligence. Use MacroTrader to do your research. That way you can do your own research and understand the risks involved with leverage trading in the FX market. Okay, a couple things I noticed here on Reddit. Should price immediately take off after entry, or is it okay that it hovers around entry for a while? Oh, man. Okay. Guys, don't be ridiculous. You don't tell the market what to do. The price is going to move the way it's going to move. Should it immediately take off? So you're going to enter and it should just freaking skyrocket into your direction. Yeah, right. Okay. And another one. Look at this. Love this. Another New York session. Another 10 pips. Woohoo! Hey, 10 pips, guys. I brought this up before. Quit going after peanuts. I mean, that's like less than peanuts. 10 pips is, guys, 0.1%. That's 1/10 of 1% movement on the asset class. Screenshot of this morning. This one is a recent trade. This one's already up 3.44%. That's 291 pips. And people, you guys are, maybe not you guys, hopefully not you guys, because you're starting to look into the MacroTrader software, but 10 pips? Come on, guys. And listen, don't talk to me about leverage. Oh, well, you can leverage. You could lever it up, and 10 pips is like 300 pips. Don't talk to me about leverage, guys, because you know what? Leverage does not change the statistics. Okay, if you just do your basic research and you go into a distribution of returns, you're gonna find some interesting things. Probably do some videos more in depth on this, but this is a distribution of returns on Euro USD. It's got some kurtosis to this, so what it is telling you is, unlike a normal, it's close to a normal distribution. It's peakier in the middle, less so in the mid-range, and it's peakier on the tails than a normal distribution. So what does that mean? And if you do this study with any asset class, you'll start to see that most of the time, price does pretty much nothing. Okay? Even less of the time, it's moving moderate, and then few spots it will move big. Okay? Now, what's interesting? If you go to the MacroTrader software, okay, and you just do a little study on when the economic data is telling you one economy's doing better than the other, and then you look at that distribution of returns, see, this is all of it. This is a large history, and it's quite even. So pretty much everything you make, you're going to lose over the long term. But if you go when MacroTrader tells you that there's a fundamentals biased, in this case, on the euro towards the dollar, okay, so we just took that section that MacroTrader told you be long USD and short euro. What does that section of the distribution of returns look like? And hey, you find something really interesting. What you find is that, you have your distribution here. It looks similar. But what happens at the tail end of things? You get a lot more moves in your favor. Let's say this is the dollar, your long dollar. You get more favors in move of the dollar, which would be on this left side of the chart. And the same thing here is just larger bins or classes that these are grouped into. But you can see very little big moves against you and many more bigger moves in your favor. So statistically speaking, if you just trade with the economics and with MacroTrader software, statistically speaking, you're way ahead, okay? And on a comparison, check this out. Okay, average gain on a total basis is, again, almost same amount of up days as down days, and almost the same average gain as average loss. But if you look at when MacroTrader tells you that there is a bias to the US versus the Euro area, you can see your up days are greater than your down days by a good percentage, and your average gain is a little bit more than your average loss. So this is huge. If 3.13% doesn't seem like a huge amount to you, guys, casinos make billions. It's a business structure that they know they're going to make billions off of based on these kind of house edges. But this is your house edge. If a casino can make billions off of a even 1% house edge, do some research, you'll see 3.1% is pretty big. All right, and that's just a raw number. That's not taken into account then further refinement of trading strategies, entering and exiting. So I told you we're gonna look at something really nice here. You probably already saw it here. And that is we're going to look at the Australian dollar, New Zealand dollar. I very much like this trade. Definitely went gangbusters in my position on this trade. And if you don't know what this is, guys, in MacroTrader, each one of these lines, and I'm going to stop calling it fundamental analysis because you got I don't want to use his name, but you got nonsense Forex traders telling you that fundamentals don't matter. And then they tell you, trying to tell you that it's news or politics, that those are fundamentals. Guys, those are not fundamentals. They have no idea what they're talking about. The fundamentals are the economic data that we can quantify. So I'm going to stop even saying that this is fundamentals. No more fundamentals. What this is economic analysis and statistical analysis. And these lines, which are the representation of the economies of the world, are made up with dozens and dozens of economic indicators and data points, okay? So, I think it timed out on me. Let me just refresh this for a second. So what they do is we normalize it into standard deviations and basically create a model, okay? So you got in these lines dozens of pieces of economic data and its health, and it creates one simple, easy to read model. And then what we do is, based off of those models, we start to pit them against each other. This here, the differentials, is basically just a more refined look of the index of how well one does against the global economy. So here, Euro is now again doing worse. The Eurozone is doing worse, which is the zero line in the global economy. US doing a bit better. Pitted against each other in a more in-depth look. we can see this. But we're going to look at the Australian dollar and New Zealand dollar. I really like the setup on this pair. So you can see that the New Zealand economy is doing far better than the Australian economy. And they have not even begun to kind of converge again in this helix. So let's hide this. They're actually telling you the same thing. They're a mirror. This and this are just inverses. It just depends on which your focus is. So if we're focusing on Australian dollar, New Zealand dollar, and you can invert that currency if you want to think of it in terms of New Zealand dollar. But basically what you get is the Aussie Kiwi. Well, that currency pair would be, obviously, if that's the base currency, would be with Australia in its correlation. So check this out. I love this pair right now because you have and this is Australia. This line is Australia versus New Zealand. What you have is the movement down in the economic data of Australia, and it gives you an insight into the future. So this move up corresponds to this move up in currency. You had time to catch that. Now it moved down, and as of back here, the price hadn't even accounted for that yet. So it gave you perfect opportunity and time to get in at the top, and we already now start seeing this move in the currency, which is a reflection of the economic data that happened here. So I love this huge risk reward ratio, and I caught it up here, and I'm holding down. Hopefully we'll get a big move back down. Keep an eye on the fundamentals. I'm sorry, the economics. No more fundamentals. Keep an eye on the economics, because as long as this is depressed, then the price will move down. Okay, it's real simple, guys. I've made economic analysis easy. And let's look at commitment of traders reports, the institutional money, where they are positioned for those two. Now these are in terms of dollar contracts, but if you look at the relative comparison, New Zealand dollar is doing better, and hopefully we'll get a flip on this based on the economic data for the New Zealand dollar. Again, it's a week old on the institutional positioning, but it can give you a good idea of what institutions and smart money is doing. All right, guys. Don't be a fool. Use the MacroTrader software for your economic analysis.